I guess everybody around the world has been watching the US banking system for the past, well, at least 2, 3, maybe even 4 weeks. We got wind of what was happening down in the US, I guess around that time, about 2, 3 weeks ago, maybe a little more. And I think a lot of individual investors, a lot of individuals in general, walking the streets of Toronto or anywhere in this country are wondering, how safe are our deposits at our major banks? Well, the first thing I wanted to touch on is to say, yes, your deposits are safe. I think there's a very big difference between the banks that are having difficulties in the United States with our banks here in our country. Keep in mind, there are a lot more US banks than there are Canadian banks. And if you look at statistics, over 500 US banks have actually failed over the last 10 years or so. So you're kind of wondering, well, why is this happening and how can a bank fail? Well, overall, these banks tend to be smaller in size, regional or community banks. Silicon Valley Bank, which has been in the news for quite some time now, the one bank that failed down in California. We had Signature Bank running into difficulties in New York State. These are two smaller banks. But the Silicon Valley Bank, the one that has gotten most attention, that was a very niche bank. It was a bank for startup companies, in particular, startup technology companies. Venture capital put a lot of money into Silicon Valley Bank for these businesses to start up. As we know, as interest rates rise, it unfortunately hurts technology. So what Silicon Valley Bank ran into was a slowdown of business. There weren't as many companies going public. There weren't as many startups. Technology in general was getting hit pretty hard last year. So Silicon Valley Bank lost a lot of business. The other major factor that caused the turmoil or the fear in these banks has been this idea of the Federal Reserve raising interest rates as fast as they have. Now, this goes for all banks in that we've seen a lot of bank deposits leave banks and go to other areas paying higher interest. So when the central bank, Federal Reserve or Bank of Canada, raises interest rates as fast as they have, people that have money sitting in a savings account, they say, well, why should I keep my money in a savings account making next to nothing when I could go out and buy government bonds paying 4 or even as high as 5% on a 2-year bond, for example, in the US? So a lot of money started leaving bank savings accounts. So when you're a smaller bank, that presents a lot of difficulty because you start seeing your money leaving your bank. And when you're a smaller bank versus a larger bank, that presents a problem. You basically have a run on the bank. Your liquidity situation, it dries up. And the end result, unfortunately, for Silicon Valley Bank was that they had to go under and their assets in the end, or their deposits, had to be guaranteed by the federal government in the United States. For a larger bank like JP Morgan or Bank of America, or even our larger banks up here in Canada, TD, Royal, Scotia, yes, they will too lose savings or lose bank deposits, but they are so large, they can weather these types of storms. And in fact, when there is a run on the banks, it tends to be with the smaller banks. People have fear and they end up putting money with larger banks. So you can see here, there's a couple of charts I wanted to show you. The first one is the shares of regional banks, or what I call community banks down in the US. You can see First Republic Bank, probably one of the banks that had most difficulty and still is having difficulty, even though the government has stepped in. Other major banks in the US have stepped in to give them money to stem the tide during these difficult times. You can see their stock prices have fallen quite a bit across all regional banks, but First Republic has fallen the most. You want to compare this to one of our banks, Royal Bank, as an example. There's a chart on Royal Bank, and you will see that Royal Bank too had their share price fall, but not nearly enough. And you can see this Royal Bank towards the end of the chart, you see the stock price really start to tail off. But again, it went from about $140 a share to about $130 a share. So it lost 5 to 7% of its share value, but not nearly as much as a regional bank. So overall, I guess the message is very clear. If you are here in our country, you have 5 major banks, 6 if you count National Bank. There are other banks like Laurentian, Canadian Western Bank. These are larger banks in general, and I don't believe there's any fear that your deposits, that your savings is in jeopardy. If you go to any of our banks, you will be able to access your money. There's actually never been a time in history where our banks stopped paying dividends. Ever since we've been keeping track since after World War II, our banks continue to grow over time, grow deposits over time, increase dividends over time, which means their profitability is good, and they've always paid those dividends, and they will always be there to pay your money when you go to the bank and you try to access your savings. So I had a few people that asked me, what's going on in the US? Can that happen here to our banks? I would say the answer is no. And even in the US, keep in mind, federal government did step in to guarantee these bank deposits, even in these small regional banks. So even those in the US that might be looking at the show, watching the show today, your deposits are now secure as well. And they're trying to come up with ideas as to what should be insured. In the US, each bank account is insured up to $250,000. Here in our country, it's about $100,000. But they're looking at increasing that in the US, and maybe we'll look at increasing it here in our country as well. So overall, are Canadians, or should Canadians be fearful or nervous as to what is happening down in the US if it could come up here to our country? I guess the quick and logical answer is no. I think it's full steam ahead. And I would say that this may present a buying opportunity for those that are interested in buying these banks on the cheap.